Okay, so carrying on. This article is from the 28th of September. Here we go. Fund manager warns Deutsche Bank bonds are trading near insolvency. David Kranzler. Deutsche Bank last legs without intervention. Its quote core cap end quote bonds are trading over 14% year to maturity. And as we all know, guys, this is the charts regarding the stock, and has been on a rapid ascent in the last year. I mean, as you can tell from here, a 1 yearly drop has dropped hugely. And the question is, how far can it go? How low can it go? Well, we all know it can go to zero and it can become bust overnight. But the question is, if that happens, it spreads a systemic collapse across the entire banking sector. And the whole world knows this. So they have two options. They can prop it up for as long as they physically can, but while doing that, you are printing into oblivion, which eventually creates a hyperinflation situation on that currency. Because the sheer volume of capital that is having to be injected into artificially supporting these inevitable collapsing markets is staggering. So there will come a time where this just goes. No amount of money will prevent that from happening. Because at that stage of time, people realise that the money they hold in their wallet is absolutely worthless. And then you start seeing a situation like Venezuela overnight, and you're requiring buckets full of fiat currencies to buy a loaf of bread. That's when people wake up and realise, hey, something is seriously wrong. And then people don't accept that currency anymore. That's it. It's that simple. Now we know behind the scenes you have China, Russia and the BRICS nations are all forming some sort of new banking system to step in place when this thing implodes. This isn't fear porn or whatever it is that some people comment. This is reality. This is an unsustainable market and it is at its end time. So there's a lot of chitter chatter obviously in the broker world regarding what is going on, and little tidbits are coming out, not to mention all the large players who are moving assets out of the financial sectors. Just the other day you had Warren Buffett, who has been the most bullish in stocks for the long-term hold. He lost a huge amount of money again. A few weeks ago it was published, I didn't cover it, but he lost something like 700 million, don't quote me on that, but he lost a huge chunk of money when one of his biggest stocks went down, while most of the other big players have moved into gold. So Buffett has now understood the markets, and he is now, I think it's 80% cash, simply because these guys, they cannot liquidate overnight, because that will send shockwaves through the stock and cause a collapse in itself. And that's what creates panic selling when the big guys move fast, because they know it's too late. So I'm going to just leave that there, and I'm going to go straight into another one from Silver Doctors, which is Jim Willie on the 27th of September. If Deutsche Bank goes under, it will be Lehman times 5. Jim Willie warned Silver Doctors recently that Brexit could detonate Deutsche Bank, with Deutsche Bank plunging to nearly 10% to all-time lows today, $11.23, and headed towards oblivion. We thought it appropriate to revisit Willie's dire warning that if Deutsche Bank goes down, it will be Lehman times 5. With Eurozone banks showing renewed signs of crisis, Deutsche Bank deleveraging by a massive 425 billion over the past year, the fastest pace since 2011 near euro collapse, and Barclays admitting a 12.8 billion capital shortfall Tuesday, and fundamental indicators in the gold market screaming financial crisis. GOFO rates remain negative for nearly 20 days, and massive inventory drawdowns at the COMEX and LBMA. The doc spoke with Jim Willie today in an explosive must-read interview. Willie, who recently stated that Deutsche Bank is under major duress and could be the first major bank to collapse in the next stage of the banking crisis. Informed the doc that unlike the collapse of the Lehman Brothers in 2008, which the Western central banks were able to contain thanks to the $13 trillion in bailout funds, a failure of Deutsche would trigger a systemic banking contagion, the likes of which the Western world has never seen. So guys, I'll pause there for a moment, and if it took 13 trillion of bailout funds, which ultimately came from the taxpayers, let's just remember how much the national debt allegedly is for the United States, for instance, standing at something like 19.5 trillion. You have the UK, I believe, is somewhere like 4 trillion, 5 trillion, but this is official figures, and there's going to be a lot of black budget numbers that aren't included inside of these figures. So this is just a gauge. You could probably add another 100% probably to those numbers to get the realistic figure. But if we're looking at like a 5 times increase, you're pushing somewhere in the region of 70 trillion, which has actually got to be getting close to global debt levels. So you're talking about doubling the global debt just to bail out one bank, or bail in one bank. So if you're telling me that a global bail-in or bailout or whatever term is used is the only way to fix this pending implosion of Deutsche Bank, how does that bail-in work? Because most of the banks in the Western world have actually already been bailed in to some extent. So they are sort of state-owned or government-owned and have a people's percentage share. So if a bank such as Deutsche requires so much capital from the entire liquid banking sector of the globe, and it sucks in all the currency in every single bank globally to support its debt system from implosion collapse, then that is exactly what it is. It's a black hole of the people's deposited funds. So then who gets title share as a state of that ownership of the bank with all that bailed in money, or all that bailed out money that has gone into supporting it from collapse? Well, that then to me sounds like it becomes a global bank owned by the global people, which has been set in motion from the global elite, a new world order, a one world bank, because everybody has a share stake within that system. Or the flip side is that bank just implodes and takes down everything with it. So that's really the only two outcomes that can come from it. A banking reset, which will probably result in a new world banking order, or the previous statement that I just made. Both result in the same thing. And then obviously we have the whole China situation with the BRICS nations on a slightly different setup. So yeah, that's food for thought. So slight detract from the topic, but anyway, I'll get back onto it now. When asked by the doc how Deutsche Bank differs from Lehman Brothers in 2008 and what else could lead to a renewed banking crisis, Willie responded, "My best German source informs me that 3 major banks are in trouble, and these 3 banks are fighting every single night to fight off insolvency and failure." He says Citigroup in New York, Barclays in London, and Deutsche in Germany every single night are in trouble. The important thing to keep in mind about Deutsche Bank is that it won't go down alone, if it goes down at all. If it fails, it will take along with it 3, 4, 5, 6, 10 or 15 banks. It will be 1 or 2 quickly, then a third and a fourth in a few weeks, another, and then before you know it, all of Italy and their major banks are kaput. My belief is that Deutsche Bank and its constant overnight risk of failure is somewhat tied to derivatives related to LIBOR, and also a risk related to their forex derivatives. In other words, derivatives that the banks use to balance off their currencies. Believe it or not, in the derivatives world, gold is treated like a currency. Isn't that ironic? The forex derivatives that the bank are involved in are very much tied to gold, so it's not just a barbaric relic. The big immediate threat for Deutsche Bank, though, has to do with their problem in hiding debt for the sovereign nations applying for the Eurozone. For example, Greece and Italy couldn't have their debt ratios over certain levels. So what Deutsche Bank did was they turned nice big chunks of sovereign debt into currency swaps. For an example of how this works, suppose you have $250,000 bad business loan that is stinking up your credit report. So you call up your favourite Deutsche banker, or Goldman, or Morgan, pick your criminal enterprise that is your personal favourite, and you tell him, I have $250,000 debt here and I want to make it go away. They say, okay, we can do something clever here. We can pay off your debts so your credit card looks good. And we can establish this $250,000 euro swap, and we'll keep it off the books. So you have this $250,000 bad loan stinking up your books. It goes away and it's replaced by something hidden in a euro currency swap. That's precisely what was done on a larger macro scale by Greece and Italy's Deutsche Bank. And Deutsche Bank is involved with several of these. And the total that is becoming disclosed is $400 billion. Apply your typical ratios and you can conclude that they are 10, 15 and $20 billion short for capital requirements. The big banks are so criminal that they have converted fraud and criminal activity into a small cost of doing business. When asked to clarify his statement that a failure of Deutsche Bank would likely result in a contagion of bank failures, Jim Willie responded, Deutsche Bank is in a slightly different situation than Barclays. Even though Barclays just announced a $12.8 billion capital shortfall Tuesday, the former Deutsche Bank CEO Ankerman was forced out last year. Interpol came into Ackerman's office and conducted a financial document raid. There's a new sheriff in town. Sources indicate that big, powerful Eastern interests hired Interpol to clean things up. We had events in April, May and June in which 5,000 metric tons were lifted out of London. Eastern entities were angry as hell that their gold had been leased and rehypothesized. The London banks used the Eastern's gold as equity for futures contracts that went bad, like in Spanish, Greek and Italian debt. Deutsche Bank's CEO could not withstand an insult on their office to retrieve data, even though he appealed to several high-level politicians. Fast forward to July 2013, and now we are seeing several Deutsche Bank vice presidents being indicted under various fraud charges, and they are almost all cooperating with Interpol. They flipped to cooperate with their serious fraud division of Interpol. London and New York remain fortresses for the central banksters, but Frankfurt might be in process of being penetrated. Getting back to your question as to why a Deutsche Bank failure would be different than Lehman Brothers, it's because they are involved with all the aspects of sovereign bonds. Spain, France, Italy, Greece, they're involved with all of them and their balance sheet qualifications for the European Union. Deutsche Bank is involved very closely with all of the Eurozone currencies and bonds, and they have massive swaps interwoven with all the major Western banks. I have a client informing me that Deutsche Bank has a bunch of swaps that they wrote against Detroit Muni bonds. Deutsche Bank has their fingers in a lot of different pies. Lehman Brothers was involved in numerous mortgage instruments. Don't bet your money that Deutsche Bank will go down. But if it does, the next day it's going to be Citi, Barclays, HSBC, Morgan Stanley, SocGen, and the big threats to JP Morgan and Goldman Sachs. In conclusion, Deutsche Bank owns $25 trillion in over-the-counter swaps with the central banks and other major banks. So expect a daisy chain of derivative failures for the 1.6 quadrillion derivative market if it were to fail. Deutsche Bank cannot break down by itself. It would result in the complete breakdown of the European Monetary Union. And isn't it funny that George Soros' son, Alex Soros, a few months ago came out with a Twitter post with a few flags like Germany, France, the UK, the Eurozone, and something else. And in the Twitter post was, which one of these flags will be the first to fall? So it goes without saying that if the Eurozone implodes and collapses, the whole political system of that Eurozone nation collapses with it. And as we know with the Brexit situation, there's a lot of other nations who are now going to be voting out to leave. And it is literally rats jumping from a sinking ship. So it goes without saying, the euro is going to fail. And the Deutsche Bank collapse is going to be the reason why that fails. And messages like this don't just come out by these top connected people. They are telling you what is going to happen. We all know that they put little bits of information here and there to show you the plans, just to show most people how stupid they are because they told you ahead of time what's going to happen. So carrying on, in today's world, when a big bank dies, they merge them with another big bank, another European bank, potentially Barclays. I think we're going to see a massive amounts of money flooding into gold. And I'll pause there again because you have a huge amount of banks. There's a Swiss bank now who are buying huge amounts of shares in mining stocks. You have huge players like Soros as well moving into large percentage holdings in gold, along with numerous others. A bank failure contagion, that's what's going to push gold way over $2,000 an ounce. Silver is going to be moving over $100 and gold is going over $5,000. I'm as certain of it as I am that the sun will rise in the east in the morning come January. And the reason he's coming out with that 5,000 figure mark is, again, the contacts that he has have told him that is the benchmark figure that the Chinese are going to be setting the gold-backed currency at, $5,000 an ounce. And that's all to deal with soaking up the debt levels. And that's all part of the revaluation process. Guys, I'm just going to stop there for a moment. This channel does offer a free service. Now, there's a lot of time and effort that goes in behind the scenes to create such content. And believe it or not, it does actually drain a huge amount of computer resources to make videos, which currently my system cannot handle that well. So that is why I have added all these ads that come up across your screen, and I've also added the options for anybody that is able to donate a little bit extra via one of the sources in the description box. Now I've opened up a Patreon account where you can donate as little as $1 a month, which with a combined effect of a few hundred people will actually make quite a large difference to the infrastructure that I can build upon this channel by buying new software or new hardware like mics and better quality computers to deal with producing the content. Now you've got an option as Patreon. You have another option for one-off donations which can go through the PayPal. Both are under the name Silver the Antidote in the description bar below. And I've now introduced a third option which will be donations via the Bitcoin. If you'd like to share anything with this channel, it will be very much appreciated and it will help buy the things that I need to buy to make this channel grow, because YouTube is actually censoring this channel, bit by bit, I'm losing all sorts of revenues from all the videos that I upload because they're very controversial. So if you want to see this channel remain, I would really appreciate if you can just donate a very small amount, whether it be monthly or as a one-off, as and when you feel it's appropriate. So guys, moving on to this last article, 70:1. This silver to gold ratio is insane and unsustainable. Keith Neumeyer. Keith Neumeyer, President and CEO of First Majestic Corp and Chairman of First Mine and Finance, returns to SGT to discuss the rollercoaster ride for mining stocks in 2016 and where he thinks we are going in the current correction. Always a straight shooter, Keith bemoans the gold ratio, asserting that it is no longer sustainable, as miners like First Majestic are only yielding 9 ounces of silver for every 1 ounce of physical gold they find, and that real world ratio is continuing to decline. So guys, you can head over to SGT Report or via YouTube and check out this video if you haven't done so already. It really is fascinating to listen to. Okay guys, I'll leave it there, and thanks so much for watching, and I'll see you on the next one.